Okay, so let's get going. Thank you so much for joining this morning. I can see some familiar faces amongst participants and some new faces, so great to have you all here. Today, we're going to be talking about gender intelligent consumer protection. Now, this is the third in a series, and actually I should pause and say my name is Katie Hyatt, and I am the digitally enabled financial inclusion lead at FinEquity. And this is the third in a series that FinEquity has been running called Design in Action. And this is to profile a knowledge guide that FinEquity wrote alongside with USAID on gender intelligent design. Now, this guide brings together a wide range of resources that address gender intelligent design, looking at research, case studies, toolkits, and best practice guidelines. It is divided into three sections, looking at why we should design for women, segmentation and user research, and then finally principles and methodologies. So a gender intelligent design approach draws on quantitative and qualitative research to overcome women's specific constraints through data-driven design based on market research to create distinct customer value. And this guide is focused on three different stakeholders: financial service providers, policymakers, and practitioners. And today we're going to be thinking about gender intelligent design in terms of consumer protection. The recent Findex, which I won't go into because I know my colleague Juan Carlos is going to delve into that, noted a big data point around use of financial services and the element of trust in usage, particularly for women. So in the vein of financial inclusion, consumer protection refers to laws, regulations, and other measures that are designed to ensure the safe and responsible delivery of financial services, as well as the fair treatment of financial consumers in their access and financial products and services. So really, it is the ability and understanding to use digital financial services and financial services confidently and safely to achieve their financial goals or financial well-being and develop a sense of control. As we often discuss in the FinEquity community, women are not risk averse, but they are risk aware. They simply have more to lose. So products and services and the information around them need to be designed to satisfy their questions and queries and concerns. And as we see, these financial products and services are fast evolving. We are seeing more financial products and more complex and technical financial products. So sometimes these risks are growing faster than the opportunities that the services themselves are creating. Furthermore, women's lower digital financial literacy and awareness of financial products further reinforces their vulnerability to these risks, such as financial fraud, the lack of transparency around costs and terms, and poor or insufficient recourse methods alongside data misuse. So another way to think about consumer protection and financial services for women is, how do you design and engender trust in financial services? Without further ado, I have an excellent lineup for you today. First, we're going to be hearing from Juan Carlos at CGAP. He's going to be talking about the recent Findex through a gender and consumer protection lens, looking at what this data tells us and how we should be thinking about it in terms of product design. He's also going to be discussing CGAP's market monitoring toolkit and CGAP's recent research and exploratory work around the WAMU DFS lab, and what findings are emerging from women in West Africa as they think about consumer protection. We're then going to be hearing from Sheila Sanfuma, who's the head of programs for digital finance at Consumers International. She's based in Uganda. So she's going to be discussing consumer protection and fair digital finance and sharing some of the examples of what that looks like from Consumers International's member countries, including how they approach consumer protection across their different contexts and different environments and contexts that they work in. She'll be sharing the Consumers International's Fair Digital Finance Index as well. And finally, we're going to be hearing from Rose Mpofu, who is the Acting Executive Director at the Consumer Council of Zimbabwe. And she's going to be discussing specific consumer protection efforts in Zimbabwe that have addressed women's financial lives, and really helping us understand the specific context of Zimbabwe and the diversity of women's experiences across the country. So before we get going, a couple of housekeeping, or a few more than a couple of housekeeping rules. You'll see the chat. Please keep it active, send us your questions, introduce yourselves, add your LinkedIn. We'd love for you to further connect around consumer protection or other elements around women's financial inclusion. At the end of the webinar, we are going to be sharing a small survey and we'd love you to fill it out. And finally, after this, we'll be sharing the slides, the recording, and a summary of this webinar. So if there are colleagues that are not able to join this morning, we will be sharing the resources after the fact. So without further ado, let me pass over the microphone to Juan Carlos, who's going to be talking about CGAP's efforts. Juan Carlos.
Thank you very much, Katie, for inviting me to join this panel, and especially to present to so many interesting stakeholders today in this webinar. So, as Katie was saying, I would like to put an emphasis on how a consumer protection, what type of different types of actions can be identified on consumer protection to make it more intelligent, and especially to identify and monitor consumer risks. And I would like to start with a more global view based on the results of the Global FinDex that was published in 2021. So here we can see that the FinDex not only shows the very important progress around access and usage of financial services, as Katie was saying, with over 70% of adults accessing formal financial services in developing economies, and with the gender gap in account ownership actually decreasing in 6 percentage points. Despite these important milestones, FinDex also shows that we still need to make progress in the quality of customers' journeys, and especially strengthening consumer trust in financial services and their financial well-being. So let's first take a look at the 24% of adults who have not yet started this journey. When the FinDex survey asked unbanked adults why they did not use their financial services, almost 1 in 4 indicated that they did not trust the financial system. In some regions, like Latin America and Europe and Central Asia, 1 in 3 unbanked consumers express no trust in the system. Actually, also globally, 36% of unbanked respondents indicated that high and unexpected bank fees was a key reason for not having an account. In Latin America, actually, this percentage was nearly 60% of unbanked adults. Vulnerable adults are the most likely to be unbanked. Globally, almost 1 in 2 of the unbanked belong to the poorest 40% of households. Almost 2 in 3 have only primary education or less, and 50% are women. Also, in developing economies, 64% of unbanked adults say that they would need assistance to use formal financial services. And women were 10 percentage points more likely than men to need help using financial services. This puts them in a situation of greater vulnerability. They can be exposed to greater risks when using financial services. Other important result in FinDex is that 9% of adults in developing economies have an account but do not use. Lack of trust reappears as a major cause of inactivity, reaching, for example, 48% of adults in lower and middle income countries. Furthermore, Findex provides interesting data on customer outcomes of using financial services. For example, 50% of women in developing economies find it difficult to come up with the funds necessary to cover emergencies. And 44% of women say they are very worried about not having enough money for routine monthly expenses or bills. This is 5 percentage points higher than men, which shows, again, even greater exposure and difficulty for women in the financial sector. So Findex shows us some signs of consumer protection issues that deserve attention currently, despite the progress in financial inclusion. Now, if we look specifically at digital financial services, we see that this is even more complicated. CGAP's recent research shows that low-income women are even more vulnerable to consumer risks in the digital financial services market. CGAP's typology includes 4 broad risk types and 2 cross-cutting risk types. And in each of these categories, we can identify circumstances where women are disproportionately facing risks in digital financial services. For example, women are more likely to suffer losses in a Ponzi scheme. Women are also more likely to experience algorithmic discrimination due to skewed and misused data in digital finance. In terms of transparency, complex interfaces affect women who have, on average, lower digital and financial skills, as we have seen in different types of research. We have also seen that in certain jurisdictions, women may fail to complain when they find a male agent or a customer-facing staff in the financial institution. So what should we do about this? One key action that CGAP is emphasizing is monitoring the market to identify and act on the risks that disproportionately affect women using financial services. Market monitoring takes a broader look at a sector, as opposed to a narrow focus on individual providers. This helps the actors in the sector better understand consumer risks, behaviors, and experiences, and also proactively identify and act on issues that deserve attention. Also helps identify innovative products and emerging risks, and lets these institutions that are starting to appear in the market know that they are seen. And also, market monitoring enables a dialogue among different stakeholders, including providers as well as consumer groups and representatives. So market monitoring, we believe, is a very important way to enable a more gender-smart consumer protection. And what are some examples of tools? These are some of the key tools that we have emphasized in our research. And a subset of all these tools are especially useful to monitor risks and identify those that disparately affect women. Analysis of regulatory reports, analysis of complaints data, analysis of consumer contracts, mystery shopping, thematic reviews, and phone surveys are those types of tools that financial sector authorities can use regularly to monitor, identify, and act on consumer risks. But also different other stakeholders can do this type of activities. Consumer associations, industry associations can do this. Now, this is just a quick look at what the market monitoring toolkit includes. It includes very detailed implementation guidance of all these 8 tools, with illustrative examples of how financial sector authorities and other stakeholders have implemented these 6 tools, including technical details, benefits, and limitations in the usage of these tools. Also, the market monitoring toolkit shows how supervisors can start to incorporate this activity in their day-to-day activities. and also how other stakeholders can support market monitoring. And we also have some further resources to understand what market monitoring is, how technology can be used to power market monitoring. And we are actually going to include one additional tool very soon in the next couple of months on the use of consumer advisory panels to support market monitoring. That's coming, so keep an eye on it. And finally, I would like to briefly share an example of how we are applying a range of these tools in the Western Africa region, and specifically in the countries of Senegal and Cote d'Ivoire. We've already started to adopt and apply some of these tools. So I'll share with you what we have seen when applying the phone survey tool when looking at DFS consumer risks in Cote d'Ivoire. And we saw that 44% of mobile money users who responded to the survey were women. And women are especially more likely to face different types of difficulties. For example, navigating a menu of digital financial services. 25% of women face those types of difficulties compared with 17% of men. Also, women are more likely to have issues understanding an offer of digital financial services, including the terms and conditions. What we also saw quite concerning is that women are more likely to lose money following a scam. But also when women face problems, they are more likely to not contact the provider when they see a problem, or not knowing how to contact a provider when facing a problem. And also, when contacting an agent, women are more likely to see that the agent would not act on a complaint raised by a woman. So this is an interesting picture of how women in Cote d'Ivoire are seeing much more difficulties when experiencing issues in digital financial services. And we will be happy to talk more about that during our Q&A. But this is all I have to say now, and back to Katie. Thank you very much.
Thank you so much, Juan Carlos. There's so much to dig into there, incredibly interesting. And as I say, we'll be sharing the slides with everyone out afterwards. The irony of it all, we've actually just had a lot of you have alerted me to the fact that there was a scam in the chat messages. Someone was contacting you. Luckily, we have good market monitoring in place, and we were able to kick that person out, good recourse mechanisms when you complained. So congratulations to Daniel and our admin team of being on top of that. But we did note that, so that person is now gone. I'm now delighted to hand you over to Sheila Senfuma of Consumers International. Sheila, I'll hand over the mic to you.
Thank you, Katie. I'll be sharing my presentation in a bit. Glad to meet with various faces that I've seen before, and I'll be just giving a brief update on the work we do and what we've seen around the world on digital finance and consumer issues that we are seeing from our members around the world. Consumers International is a membership organization, so we represent consumer representatives working locally in more than 100 countries, and we work on various issues across different change agenda areas, including food, sustainable consumption, digital rights, finance, and a series of other areas of consumer concerns. But my focus today is going to be mainly on digital finance. Our work in finance is really embedded or is based on a foundation of our fair digital finance vision, which looks to empower consumers and states that for digital financial consumers, financial services to be fair, they do have to be data protected, meaning that consumers need to have a right to their data or how their data is used. They have to be inclusive, and this looks at various groups of consumers, including vulnerable consumers or unique sets of consumers that may come up as we advance in the digital finance world. And also it has to be safe so that consumers can have confidence on how their financial resources are used. And also it does have to be sustainable. And this looks beyond from having communities having places to live or being able to manage their finances sustainably, to issues around incorporating climate finance or incorporating the impact of the environment on the choices we make in finance, and availing choices or smart choices for consumers when they're consuming various products. In terms of the work we've done within the accelerator towards the vision, we've done a lot of work around representation, ensuring that the consumer voice is heard in different forums, especially in regard to policy and regulatory setting, but also working with businesses to ensure that products and solutions designed for consumers are safe and fair across the board. We also do have particular trainings to empower consumer associations so that they are up to date and have the right skills to be able to engage effectively with different stakeholders and ensure that within their various localities, consumer issues are prioritized and that the finance ecosystem is really pro-consumer. I won't go through most of this. You'll be able to have the slides, but just a brief overview of the work we've done. And one of our key pieces of work is the consumer experience report that we published last year towards the end of the year and published early this year. And this is an annual report that measures the consumer experience in digital finance. As I did say, we do have a network of consumer associations, and we try to look at various ways consumers are experiencing digital finance across the different continents that we work in. For this report, we did look at 4 pillars, looking at consumer protection needs, looking at consumer protection frameworks in various countries, looking at inclusion and protection playing fields. And this was mainly looking at infrastructure, at inclusivity, at lived experiences with digital financial services, but also looking at ultimate user outcomes. And with this, there was just one element of trying to understand the extent of positive outcomes for consumers while they engage with financial services. A link to the report will be shared since we can't go in detail through all of it, but just a few findings from the report. Overall, we did see that the score across the board on the consumer experience was 40.6 out of a possible 100, which really paints a concerning picture, especially in terms of what needs to be done for consumers to be able to feel protected in the digital finance environment. But also some of the parts that scored really poorly were around the status of financial risks, mainly around consumers understanding or being conversant of digital financial services risks as they come up, but also their capability to protect themselves when faced with those risks. Other areas that really did need to level up were around financial consumer protection frameworks, of which even when these are in place, given the rate at which digital innovations are going, they do need to catch up with this, because the innovations are moving way faster than the rate at which regulation is keeping pace. And from what Carlos shared or what we've done before, we've seen that across the board, whether it's around frauds and safety, whether it's around redress and feedback mechanisms, whether it's around data safety and protection, innovations are moving way faster than regulators or solution providers can be able to catch up to ensure that consumers are protected. Surprisingly, one of the areas that did score quite well was around DFS inclusivity, which scored 65.2. And this was mainly driven with an aspect, with a measure that had to do with access. But when you come to look at beyond access, to look at the extent at which the quality of the services that consumers are getting, or how this affects their overall experience, the score on that was low at just 41.6, meaning that much as we've made some strides in terms of access, in terms of infrastructure, there is still more need for us to do a bigger role in terms of ensuring the quality of services consumers are getting is good, and most importantly, that we are including all different categories of consumers. And just to dig into some of those 2 elements, particularly looking at digital financial service inclusiveness. For this, we're looking at the degree of accessibility of digital financial services for all population groups. And for most of that, we did have a few indicators that we're looking at that were aspirational, where even though we did have some data available, given the scope of countries we're looking at, which were about 30 countries across different jurisdictions in Latin America, in Asia, in Africa, we did realize that For some, there was data for, let's say, a few countries in Africa or a few countries in Asia, but there was no cross-cutting information or standardized information that you could use to actually track and measure some of those to the detail that we did want. And for others, even when the information was there, the sample wasn't large enough to be able to be included, particularly looking at marginalized groups. And with this, we speak about women, we speak about young women, and also people with disabilities or unique groups of consumers, where sometimes, even though there are digital financial services in place, they may not particularly pay particular attention to special groups or unique groups that are outside the norm. Another element that we did really want to focus on is digital financial services lived experience. And this did look at different indicators, including the extent of digital financial services usage, consumer frustrations, data limitations, and various aspects around consumer complaints. And with this as well, we did have some limitations around having aggregated data and ensuring that we do have enough data to represent all the countries for that to be in the report. The FinDex was useful. Most of the findings were based on a survey we did across 90 member countries that were low and middle income countries, and that informed our baseline data. But also we did validate these findings against the FinDex and also against some of the reports from the GSMA, from AFI, and from various reports, global reports that were doing related research to ensure that our work was actually looking at a bigger picture beyond just what we have. And finally, we did look at the ultimate user outcomes. And with this as well, most of the indicators around this were quite aspirational, because like the other two indicators, data was not to the detail that we wanted, or some of the outcomes that we're looking to see did not have any data existing at all, particularly when you're trying to look at particular groups of women and particular groups of consumers. And this is mainly when we're looking at sustainability and the effect that this could have on particular consumers. And as we've seen in some contexts, that when it comes to sustainability or issues around finance, women tend to be taking on the bigger burden or expected or affected more. But when you try to look for data on that, some of it is anecdotal, or for some countries with best practices, it will be in place, while for others aren't. And overall, we did see that there is really need for us to have more efforts in terms of ensuring that as we do or advance different types of work, we have the right data, or data is the starting point at which you can be able to know what to look out for, or to be able to measure and track progress across different indicators and across different countries, to ensure that we have some kind of standardized format at different levels where we collect data, whether it's on the regulatory or policy front or on the solution front. And this has to be both from the consumer lens, but also systemically across various themes. As I finalize, I'll just give a few reflections from our members that we've seen. And for some of these, what we're seeing, for example, in Argentina and countries like Mexico, gender violence is still key and femicides are still ongoing. And we also did see in 2021 a research that did show that at least 45,000 women and girls were killed worldwide by an intimate partner. So these are still issues that arise, and some of these are based on financial related issues. We did get feedback from some members, let's say in Rwanda, who say some of the providers do say that, yes, they're looking at gender, they're having a lot of campaigns around gender, but there isn't much evidence to actually show for it. So there is much more to be done. And from Consumers International, really, we do see that usually there is a gap in representation, particularly when it comes to policy and governance, ensuring that we have women in key spots or in key places to ensure that they're putting the gender voice or the gender perspective as policies are brought in place. And even when these are in place, sometimes for some of the countries we did see, for example, in places like Fiji, in some of the places like Spain, our members in the US, we did see that even when they are there, sometimes for some of the countries, there'll also be underlying social norms that are usually prioritized over the broader gender aspects or the needs of women or unique groups. This slide is really about some of the interventions some of our members are doing, which include, among others, campaigns against gender violence, campaigns around pink tax. This is a discriminatory pricing that inflates prices for the same goods for women compared to what men pay. And this is mainly key in some of our high income countries. And some of the other issues really are around some of the interventions, for example, in Zimbabwe, in Fiji, in India, we are having grassroots community interventions on financial literacy that particularly target women. And as Consumers International, we're also part of the working group for women with UNCTAD, and also do quite some work in ensuring that we have training modules that are designed to empower our members to ensure that they do have the right capacity to be able to engage and also measure impact on some of the work that they do on gender. I'll pause here for now and hand back to Katie.
Thanks so much, Sheila. That was incredibly interesting and rich. We will be, I think that we've shared the Fair Finance Index in the chat, and again, we'll be sharing the slides. Any questions, please post them in the chat. We're happy to get them from you. But finally, I will be handing over to, here we go, to Rose Mpofu from the Consumer Council of Zimbabwe. And Rose is going to be speaking for the next 8 minutes on their work and what they're seeing in terms of women's wants and needs around consumer protection in Zimbabwe. Rose, over to you.
Thank you very much, Katie, for this opportunity, and special thanks to Consumers International for availing this platform. I'll be speaking to you about the experiences from the Consumer Council of Zimbabwe. Women's financial inclusion in Zimbabwe, particularly when we look at their inclusion which moved from 29% in 2014 to about 52% in 2017. And then in 2022, it was noticed that the gender gap had narrowed to 12%. This was as a result of the many campaigns by mainly the women's organizations. And we even had a women's bank that was launched a few years ago, encouraging women to bank. The financial institutions are less accessible, especially to the rural populace. However, mobile phones are helping to bridge the financial access gap. So in terms of the rural population, they're usually very far from mobile networks, and it has taken a long time for people to be able to, to get linked to banks, to financial institutions. The rural-urban financial inclusion gap is drawn from 17% is now down from 17% in 2014 to 10%. There's continuous decline in adults relying only on informal sources. Lack of acceptable collateral is the greatest problem, and it mainly affects women. Up to 90% of women lack acceptable collateral security, such as title deeds, because sometimes, most of the times, even residential houses are put in their husband's names, and the woman's name is not appearing on the title deeds of her house, which she lives with her husband. And when it comes to the financial institutions, they would require the title deeds as collateral, and it becomes a disadvantage to the woman. This is further compounded by traditional property rights, which are skewed against women, particularly in rural areas, where the land is said to be the man's land because the wife has moved in to stay with the husband in his homestead. Therefore, the land is said to be his land, but not the woman's land. Government is trying to regularize that and to encourage women to own property, to own land, but it's taking a long time. Women may have lower financial literacy rates, which make it harder for them to navigate the loan markets if they have missing documentation. Ordinarily, women have been disadvantaged in the education sector. Even though Zimbabwe has a very high literacy rate, it is still a fact that women are the majority of those that may not be well educated. Moving on, I will talk about some of the financial inclusion challenges that we experience for women. First of all, access itself is a big problem. Most women cannot access financial institutions, either where they live is too far or where they expect to find, the necessary gadgets, the necessary infrastructure to enable them to access the financial institutions may actually be lacking. So access to formal financial services by women is instrumental in helping to achieve gender equality and women empowerment. The goal is to ensure that women and women-led businesses have access to and are able to use multiple financial services as tools to develop their financial freedom and allow them to contribute meaningfully to the economic growth. Women empowerment cannot be achieved without ensuring their access and usage of appropriate financial products and services. Therefore, financial institutions are always being encouraged to be all-inclusive. So this goes even for policies that are being made, for cost of service, for reliable internet, which is almost always a big challenge. When somebody wants to make transactions, they find that they do not have internet. So it's a big problem. I'll move on to talk about what research has told us as citizens about women's consumer protection. Through the FinEquity survey that was carried out, the latest one that we have, CCZ discovered that women's financial inclusion, attitudes, behavior, demographics help develop policies that generate sustainable, inclusive growth and development. Distance is an important factor for women participation in digital financial services. Despite major progress by the financial institutions in digitalizing their services, 90% of the women still prefer the physical visits. They trust the physical visits more than anything. They would want to walk into a bank, a building, and they do not trust the digital systems. They are more likely to open bank accounts if services are closed. Women lack sufficient information about the products and services that will work for them. Due to low awareness of products, women typically access funds from informal sources of finance, such as usury lenders, loan sharks, rotating savings, whereby a group of people loan each other maybe $5 per week. And if it's a group of 10 people, the lady will have about $50 every Friday, or after, depending on their timelines, that's how people are surviving. Sometimes it's even friends and family, which is sometimes also quite risky and costly. And the last issue is to talk about consumer protection policy. CCZ has worked and has forged and enacted policy with multiple stakeholders. In fact, we lobbied for the Consumer Protection Act, which is now in place, and now regulations are being made. This includes even working with other partners, other regulators, such as the Deposit Protection Corporation, which is the institution that is responsible for providing compensation to depositors in the event of bank failure. Such synergies contribute to financial stability and public confidence in the financial system. Next slide, please. We have also done work with other regulators, such as the central bank and the Old Mutual, which is a pension institution. We've also worked with women's organizations, such as the Zimbabwe Women Resource Center and Network, in trying to ensure that women's access to budgeting is enhanced. Currently, we are working on gender budgeting projects, where we are coming up with gender budgets, women's committees who will be able to go to local authorities to speak on behalf of the rest of consumers on how local authorities should budget. And this involves our women's clubs, because we run what we call consumer action clubs, which are mainly women. Generally, there is limited awareness of financial products among women compared to men in Zimbabwe. Financial institutions need to deliberately give out information that relates to the availability of formal financial products. In conclusion, I would like to speak about consumer education. One of CCZ's primary roles is consumer education through multiple outreach programs. Consumer education is particularly important for women because of the existing digital finance literacy gaps. We work with regulators to do some consumer education. We also work with many other institutions. And I would like to say that there is a lot of scope in terms of bringing women up to speed in terms of financial inclusion. We have also been accepted as a player in the financial inclusion. Thank you very much.
Thank you so much, Rose. That was very insightful and great to learn more about Zimbabwe, a country that we don't hear too much about at FinEquity. And I've just posted something in the chat, for those who are really interested in understanding the minutiae of household expenditure and how this relates to women's economic empowerment. You have a monthly newsletter, or a monthly collation of statistics and analysis, which you are happy to share. So anyone who wants to receive that, there is direction in the chat. So one thing I want to turn to is the link between consumer education or financial literacy, digital literacy in consumer protection. So Juan Carlos, let me turn it over to you. If you think about financial service providers, how would you advise them? How would you get them to think about DFL in the vein of consumer trust and protection?
Yeah, I think definitely financial literacy and digital literacy are important to consider. I think it's important to see at the two sides of literacy, though. And I always want to ensure that we not only look at literacy from the side of the onus on the customer or the responsibility of the customer to be more literate, but also how the information is presented to the customer to enable their understanding of that information. Because let's be honest, many of us, we can consider ourselves financially literate, digitally literate, but we may still have an issue understanding the disclosure that providers share with us. So these are two very important sides of the equation. So on the one hand, providers need to make sure that information that they provide to consumers are presented in a simple, transparent, clear manner with formats that are tested so that they've been already proved that they are understandable to consumers. And then on top of that, that's the first important step. On top of that, raising awareness, providing key messages to consumers, providing adequate customer channels where the consumer and the provider can communicate. We have seen some interesting examples in Kenya, for example, and other countries, where consumers can actually interact with providers through SMS to ask questions around usage of products, to have also some mechanisms and platforms to be informed about financial sector issues in a more constant manner. So those types of platforms, services, where information is given to consumers in different moments are very useful. But I also always just want to make sure that we realize that it's not only about financial literacy. Financial literacy needs to be accompanied by adequate transparency of information.
Great answer. Thank you so much. And we'll link to, I think that Anika has probably already linked to our work around digital financial literacy, and the role that consumer awareness plays in a robust sense of DFL. I'm now going to ask Sheila a question, because we've one element of consumer protection is really about, the freedom and the choice to choose the financial services that suit you best or appeal to you the most. And Astrid of the World Food Programme is asking about increased risks for women when they don't have that choice. Perhaps they're only able to receive cash from the government or from a humanitarian agency. And I know that you have members from all over the world. So I'd be really interested to get your thoughts around, choice and competition and the role of that you see that in playing for women. Let me hand it over to you.
Yeah, Thanks, Katie. I think from what we've seen from most of our members, from some of the surveys we did early on in the program, we did see that overall the risks that women face were around frauds. The top risks were around frauds and safety, around data protection, whereby even consumers who thought they had rights or access, they would just tick a box, but they were not yet sure or confident on how that data was used in the background. So when you look at some of those issues, you realize that for some of the localities or the places where consumers are working, especially female consumers, there'll be, for example, just two providers, because the existing competition laws or regulations are not sufficient, or they're not being implemented to a degree that allows a broad amount of choice. So you find yourself with, for example, two big telcos that are doing all the work. So in the end, the price difference for women is low. But even when that's an advantage, where you know that you can choose one over the other, usually consumers do not have enough information. Going back to what Rose was saying, usually the information that comes out from providers will come in the form of marketing information that's hoodwinked as financial literacy. So in the end, the consumer is unaware that there are all these options that they could choose. So having more providers or opportunities for choice is actually excellent in terms of reducing some of the risks, in that consumers can be able to know which provider offers better rates, which provider has better service, what are the options available to them. But given that most times women do not have the right information, or they don't have the right information that they need to make informed choices, this creates a hiccup that would that otherwise derails all the advantages that choice would bring. But otherwise, the bigger issue is also sometimes around regulation. So it's important to collect some of this data and ensure that the right representatives of consumers are speaking to the right policymakers to ensure that some of these are implemented.
Yeah, that's it's very interesting to think about, how our own financial lives, compare to perhaps the lives of some of the people that we talk about and are trying to work with, because it is a completely different, the choice is something that I think that we take a lot for granted. And I think it's also important to note that choice is something that many contexts are very much still working towards. Gitane has noted in the chat that this is still a pipe dream in many African contexts, but I would also say, from my own experience, very much in the Pacific, where access is a real challenge, and the business case is something that the financial service providers are still very much grappling with, and the regulators are often loath to enforce. They can't really enforce it. So that is that's just an important element to remember. Now, Rose, I want to hear from you about about Zimbabwe, and this idea that, we often say that women are not risk adverse, but they are more risk aware. They have more to lose. And I'm wondering if you can reflect for a few minutes about what those risks look like in Zimbabwe, and whether you think that women are indeed more risk aware than risk adverse.
I think that's an interesting question. In fact, most women are not big risk takers. they would rather want to bite small chunks rather than take huge risks in one time. What we have discovered in this country is that women are more able to pay back loans more than men would, because men will go for big, loans, and sometimes they don't even think about, the risk that is associated with that. But women normally, especially if they are doing it as groups, as women's clubs, they would take the loan and maybe get the club to act as the guarantor. So it's more like, they are more aware of the risk, and they are more afraid to be found in the wrong. So I hope I've answered your question.
Yeah, and I think it's your answer, I think could be applied across sort of more contexts than just more countries than just Zimbabwe. It's something that we see a lot, just the how much women have to lose and how they manage that. So thank you for that. And I will make sure everyone is following the chat, because we're having some really, really interesting dialogue in there. So thank you everyone who's adding their 2 cents to there. Juan Carlos, I want to ask you about sort of where we focus design, because I think often when we think of gender intelligent design, we're thinking of the end user, which is where we should be thinking. We should be trying to understand their perspectives. But I also want to ask about what that looks like within a regulator or within an FSP, and the kind of design or thinking that we need to think about in terms of staff and how people within the organization are geared up to understand the risks that women face and how they might be approaching it.
This is such an important point, Kate. And we are calling out a new type of approach to consumer protection that has been developed in a few developed and developing countries, which is a more customer-centric approach to consumer protection. That instead of focusing on how providers comply with a detailed set of rules and requirements, such as, for example, posting your fees in a branch or in a premise or an agent, the emphasis now is more on what are the results of those actions on the actual customer. So looking at customer outcomes from the side of consumer protection. And this is an important change of mindset for regulators, supervisors, and also for providers. And this entails a range of actions, but the most important is to really think how our actions are influencing users and whether we are keeping track, both from the providers and from the authorities, of those effects on customers of the actions that providers take. And this entails making sure that disaggregated and segmented data is well established from the outset from the provider side. And also that the systems, the customer databases, and the financial accounting and other databases can link so that you can do these analytics based on usage of products and characteristics, socio and demographic characteristics of your customer profile, so that those 2 databases can really give you a very important look at how women and intersectionality characteristics of women are doing in terms of usage and quality of financial services.
Yes, I mean, I think that when we think about, design and gender intelligent design, it's all about data. And, financial service providers often have data. We've been talking about sex disaggregated data for quite some time, and I will continue to do so. However, a lot of the time that data is just sitting around and we don't necessarily know what we should be doing, or they don't know what they should be doing with it, how to analyze it. And so, with the staff capacity to actually, dig into that and understand what it's telling us is absolutely crucial. The data is no good if it's sitting idle. And that's it's a big ask, but it becomes a question of, why collect it if you're not using it? And we need to better equip and help financial service providers really understand that. Sheila, back to you. I have a question for you. As you think about your members and you think about what fair consumer protection looks like, and how you balance consumer protection with these sort of catapulting fintech developments and products and services that really are advancing, faster than certainly I can keep track of. So how would you advise your members to really keep that in balance? Not to lose the enthusiasm for innovation, but also understand what this means for the end user, who are the most vulnerable user, women.
Yeah, I think for what we've been looking at recently is mainly understanding that for us to accelerate change, we need to collaborate. We need a collective effort for all the ecosystem players. Previously, it would look like there is the government or the policymakers, then we have the consumer associations or the watchdogs, as they called, and then there is business, and everyone is looking at each other with a suspicious eye. But we realize that with digital finance, with how volatile things are changing, it's crucial that all the different ecosystem players come together to come up with solutions collaboratively. And we've seen this in some of the organizations we work with. You heard from Rose that they do work with providers and with their regulators. We've seen this in some of our members in India, in Fiji, in Latin American countries, and the Caribbean. The Caribbean things are still a bit slow. And also we do work with various representatives and various players within the ecosystem, whether it's fintechs, are we having discussions with some of the big businesses to see how do we get the information we are seeing from the providers, link it to the information we are seeing from our members, whether it's through using innovative tools like social media to collect feedback from consumers on their frustrations. And then how do we work with business, with governments to understand what they could do, or which innovative tools are out there that they could employ, so that as we see all these challenges, we manage to come up with solutions collectively that will be able to accelerate change. Otherwise, we'll find ourselves in a situation where one side is doing well, but as long as there are big gaps remaining in the other parts of the system, then it won't bring in effect. So really, a lot of what we are doing is really providing platforms for collaboration, but also ensuring, like you say, data is really important, and not just in one place, but across different countries that we work in, and knowing the right kind of data to collect or how to track it is as useful as well.
Thank you so much. And I realize we're at time, so I'm not going to get to my last question for Rose, but we will be reporting out on this webinar together. So keep an eye out in your inbox for that. But I want to thank warmly Sheila, Rose, and Juan Carlos for such an informative discussion. It's been excellent. And to our participants, thank you for all of your great inputs in the chat. We'll be capturing them too. There's some excellent resources that we will be further sharing. So without further ado, thanks for joining. Have a wonderful rest of your morning, afternoon, evening, and we'll be in touch. Thanks, everyone.
Thank you. Good day.